It's Saturday, May 28th, 2016. I'm going to talk about gold and silver for that matter. We have had a pullback fairly sharp, and yeah, a lot of people are probably worried about this pullback in gold, mainly because we've had such a vicious, bear market in gold from 2011 and silver to 2015, December, beginning of December, and the mining shares as well bottom in January. And but I think, in my opinion, this is just a correction, and we have bottomed in the correct longer term correction that we had, and we're in the second leg of a bull market in gold and the mining shares, in my opinion. So yeah, I've listened to a very interesting interview just a few minutes ago, and I'll put the link to it. It's Pierre Lassonde. He's a legendary mining investor and mining company CEO and chairman, and he was interviewed by Eric King from King World News, and he basically thinks that we are on the on a second leg of the bull market. The first leg having been 2000, 2001 to 2011, then a correction of 4 years, which is longer than the correction we had in the mid 70s, which was a couple of years from 74 to 76. Gold was cut in half back then, and this time we corrected about 46%. So yeah, it's taken longer, but yeah, Pierre Lassonde, he's the legendary mining investor. He thinks this is the second leg, and we started in January, the second leg for the mining shares, and for bullion, of course, December. And the other point he made, which is quite interesting, is that in the last 9 out of 10 years, gold has made a low in the period between May and June. And by a low, that means a relative low. And then and mainly because it is a period of weak physical demand. So he's still very bullish. This man, when he was chairman, CEO of Franco-Nevada from 1982 to like 2000, which was a bear market in gold, he returned about 39% compounded annually to his investors. So he even made money in a bear market. So he basically thinks that mining shares, for example, were terribly undervalued. And even though they've gone up a lot, since the beginning of the year, he thinks they're still undervalued. So his advice is just to stay invested. Of course, you don't want to risk all your money. Just put a percentage of your money or capital that you're comfortable with, and that's what he does. And the other point he makes is that he thinks the Shanghai Gold Exchange is going to become like a casino, mainly because of the Chinese capitalistic mentality and gambling mentality. And he thinks that could really put a rocket under the gold price. He's not saying it's going to happen overnight, but that's the other point he made about the Chinese. A little bit more background on this guy, Pierre Lassonde. He's French Canadian, so he was chairman of CEO, of Newmont Mining, one of the biggest mining companies between 2002 and 2006, and he was president of the World Gold Council. So the guy is, he's not a stupid man. And the other point he makes, and probably a lot of you have followed this, and I have as well, is the Dow Gold ratio, which basically is a ratio between financial assets and hard assets. And There are periods to own financial assets and periods to own, physical, assets like gold. And he was pointing out to the fact that in the last 116 years, that ratio is gone 1-to-1 twice. First time was in 1934 when the Dow dropped to 36, not 36,000, just 36, and the gold price went up from $20.67 to 35. So it was roughly 1-to-1. It was like 1.2. So yeah, and that was the top of the gold, market relative to stocks. So you should have bought like stocks back then in 1934 for the long term. And then the other time that happened was in 1980 when gold was above 800 and so was the Dow around the same level. So it actually went 1-to-1. And from 1980 to 2000, you would have been better off being in financial assets rather than gold, because that ratio got up to like 46. Right now, it's dropped quite a, it dropped quite a bit to 2011. That ratio has rebounded, but it's still way, way below 46 that we saw in 2000. And he thinks, that's his opinion, not necessarily mine. He thinks the Dow won't drop more than 10 to less than 10,000. So he sees that ratio going back to 1. So he sees gold at least to 10,000. And yeah, what else? No, that's it. He just thinks this is a correction and advises people to stay invested. And I agree with him. I guess one thing about markets is that they never go up or down in a straight line. So that's it for now. Have a good weekend, continuation of your weekend. If you like this video and you haven't subscribed to my channel yet, please do. And also give me a thumbs up if you enjoyed it. And share it with friends. So yeah, this is Maneko64 logging off. We're the home of alternative economics and contrarian views. Take care. Bye.